What about on the dollar? What impact there? I mean, we've already seen the dollar 10% off its market peak. We've seen considerable dollar weakness over recent weeks and real dollar strength, of course, back in March. So clearly the dollar driven by risk appetite and fears around the virus. But is there a politics angle here? Do we just expect a lot of volatility as we head to November?
Yes, we would expect some volatility as we head into November. I mean, from a more strategic point of view, we would be I would say bearish on the dollar because of the widening twin deficits in the U.S. The erosion of the interest rate advantage the U.S. has had, and it's relatively expensive on our models. And also for the attempts from the Chinese to de-dollarize over the very long term the global economy and commerce could be successful, at least partly successful. So that speaks to a longer dollar over the long term. But from the short-term perspective, actually, our own signals suggest that the dollar is actually oversold. So there is room for some short-term consolidation, which you could argue is happening right now. So it's a bit more choppy right now. But the dollar down is usually normal in a market recovery. So this isn't unusual at all, and it's usually positive for risk assets, especially for emerging markets. But in terms of the impact on the election, I would say this is interesting because I don't think it's as clear cut. I would say the divided Congress would be probably negative for the dollar, and you'd see sort of positive for risk markets globally. But interestingly, a Democratic sweep, you have the possibility that you could have significant stimulus, a domestic investment program, reshoring of supply chains, et cetera, all emphasized in a program, which could then draw capital inwards and be dollar supportive. So I think there's an interesting argument the other way in a Democratic sweep. So